Didn't you get lucky? I think you're good to go, Jason.
Yes, live streaming has started.
I don't even remember if am I chairing?
Yes, you're the
Okay.
chair. So call the meeting to order, same as usual.
Okay, cool. All right, so we're gonna call this meeting of the Standing Budget Committee to order at 1:04 p.m. And I will start with the land acknowledgement. The Altadena Library District acknowledges its presence in the traditional, ancestral, and unceded land of the Gabrielino Tonga peoples. Altadena is located on the stolen homelands of the Hahamunga tribal band. The traditional territory of the Gabrielino Tonga is referred to as Tomangar, which includes the areas currently known as Los Angeles County, Riverside County, West San Bernardino County, parts of Orange County, as well as the 4 southern Channel Islands. Entities such as the US government and non-native settlers have subjected the Gabrielino Tonga peoples to historic and continuing injustices, including genocide, forced displacement, and cultural and linguistic erasure. Altadena Library commits to learning, educating, and informing its staff and residents of present-day Altadena about the rich histories, vibrant communities, and culture of Gabrielino Tonga people, present and past, through our collection development, resources, and program offerings. We do roll call for standing committees too. Okay. So roll call. Trustee Lim, are you here?
Yes.
Okay.
Hi.
And I am here as well. Any changes to the reordering of the agenda items? Okay. And Trustee Lim, do you think I can get a motion to support and approve the agenda?
Yes. So call, is that the right word?
Okay. This is so weird with 2 of us.
It is.
Okay, and I'll second Trustee Lim,
Aye.
and that's an I vote for me as well. Do we have any public comment?
Catalina, do we have any public comment?
Sorry, I didn't realize I was muted. No, we did not.
Okay, thank you.
Okay. I don't know how to handle the approval minutes because I don't think Trustee Lim or myself were at the last meeting.
You can still move to approve them, even if you have not.
Okay.
We're not at the last meeting. You're just reviewing the notes and approving them.
Okay.
Yeah,
I mean,
approved as written. Right?
I will second that. So, Trustee Lim,
Aye.
and that is an I vote for me as well. Okay. Trustee Lim, any feedback on 4? Any items removed from the consent calendar? I don't think we changed anything. There's no unfinished business. And so that brings us to 6A, new business approval, review and approval of the mid-year adjustment, which is an action item. And I'm assuming we have a presentation on this.
So what we'll be doing, if you want to take a look at your agenda package, is we're just going to go through line by line from the staff report to talk about where we're at this far in the year, what our proposed amendments to the budget looks like, and answer any questions you might have about those proposed amendments. So if you go to page 9, do you guys have your packages available?
I do, yeah.
You do.
Okay. So as you can see, the adopted budget is column B. So that's what the board voted to approve back in May of 2022. Column A is where we were at after 6 months. So at the end of December 2022. Column C is the proposed amendments based on either adding more in terms of expenses, reducing that line item, as well as some of the projections that we have in terms of additional revenue. So D is the amended budget with either the addition to that line or reduction to that line. And as you can see on row E or column E, that's where we're at up to the, at the end of December, we should be at 50%. So you can compare based on the amended budget where we're at in terms of percentage. Does all of that make sense?
Mhm.
Okay. And I'm trying to look at both at the same time. So, and we do have Christy even here from IBLE, who between the two of us, hopefully we can answer any questions that you have. I will start out by saying that overall the budget looks very, very good. As you can see, based on proposed amendments, we have an additional $153,400 than we originally projected back at the beginning of the fiscal year. And to skip far ahead, what ends up happening is that 153, almost the full amount, is going to be recommended to go into reserves, meaning that we pretty much budgeted spot on at the beginning of the year where all of this additional revenue will be able to go into reserves. So pats on the back, that's really good news. So I'll just start, and I'm just going to go through the staff report. So line 2, property taxes and assessments. This is an increase to reflect the actual taxes and assessments levied as of January 2023. So as you can see, we guesstimated or projected 3.955 million, and the numbers actually came in that were just over 4 million, so 4,080,000. So that's going to increase that revenue line 125,000. With line 3, this is an increase. This number was a lower projection than in the past because we weren't taking passport photos. Those were reinstated a couple of months ago. So with the addition we'll make in passport photos, that's where you'll see that increase of $7,500. Let's see, line 4, interest income. This is an increase for projected earnings on investment of general funds since we're moving them into CLAS, which is a California Cooperative Liquid Assets Security System. This could very well be more than that, but we always try to budget conservatively. So we did add 14,900 to this line to make it an even 20,000 for the year. And then line 5, other revenues. That's the line where we'll have filming revenue. So that came in higher than we had originally predicted. We do know that the E-rate reimbursement, which is also part of line 5, came in at over 46,000 this year. So doing the math between the 46,000 we received for E-rate, which had not come in as of the end of December, we actually are just getting that rebate right now. And adding the 16,000 we've already brought in revenue, we did increase that line by about 6,000 to account for the increase in the E-rate, as well as additional filming revenue that we've generated this year. So again, grand total in terms of revenue, our adopted budget for last fiscal was $4,071,600. We're now at $4,225,000, an increase of $153,400. And as you can see, we've collected 98% of our revenue for this year.
Nikki, can I ask some framing questions? This is the first time I'm on this committee. Sure. So very briefly, what is our calendar year? What do we consider a year for the budget?
We budget based on a fiscal year. So that runs from July 1st to the following June 30th. So this fiscal year started July 1st of 2022 and will end June 30th of 2023.
And we receive our main prime revenue from line 2, right? And that comes in December-ish, give or take, correct?
Correct. Yes.
So that's why
we get that projection because Christy can explain this more thoroughly, but that's based on the projection of what they're going to continue to collect till the end of the fiscal year. Sure. They don't have the full 4 million right now, but that's what they predict to collect by the end of this fiscal year. So we're able to add it into that revenue line.
Right. And then in terms of other revenue, when we get donations, is that under that as well?
No, as we keep going through the report, there's a separate fund for donations and grants.
Okay, that's
Yeah.
it. Thank you.
Yep. Jason, did you have any questions? And I'm wondering, should I
I'm good
put
for
the
now.
numbers up on the screen? That might make sense, huh? In case people are watching. I didn't even think of that. So let me share my screen. Oh, Catalina, can you let me share?
Yes, let me find you. Host.
Perfect, thank you.
Mhm.
All right, so can everybody see that? So I'll try to like use my mouse to kind of point out where we're at too. So again, like I said, we're at 98% of what we're expected to collect this year and an additional 153,400. So that's really great news. We always like to get more money than we projected to get. So moving into salaries and benefits. So line 10, which is salaried, this is a net decrease from elimination of an office manager position and then an addition of a library manager. We're currently hiring for an adult services manager, and we budgeted for that person to be 4 months of fiscal year 23. As you'll see later, we did add money or add expenditure to our audit and financial services. So that kind of offsets that as well. So there's a decrease in salary, but there will be an increase with our hiring or outsourcing of finance to ideally. In terms of hourly, there's a net decrease of $3,300 from a vacant library assistant position, and then an addition of a part-time accountant. So that's just very minimal, but this does decrease wages by almost $60,000 this year. And I'll just keep going. If you guys have questions, just stop me, okay? So moving into benefits, retirement, and taxes, line 14 with health insurance, there's a decrease due to the changes mentioned in lines 10 and 11. And this is the case also for other medical insurance. With less staff, there are less expenses related to insurance as well. Looking at line 17, I'm really happy to share that we budgeted originally $45,400 for our workers' compensation insurance. And what we actually paid was $25,400 less due to having no workers' comp claims in the last, at least since I've been here. So over 3 years, we've had no workers' compensation claims. So that number continues to decrease, which is wonderful. Let's see, line 18, CalPERS retirement. Again, this is a decrease due to changes in lines 10 and 11. We have 2 less employees right now that we're paying into CalPERS retirement. Line 20, which is payroll taxes. Again, there's a decrease due to the changes in having less staff. We pay less to paychecks. It all is based on number of employees. So again, just some minimal decreases, but overall, that's a reduction in salaries and benefits of $105,400. And as you can see, we're 51% spent, which is actually really good when you consider that we already paid the full unfunded accrued liability, $226,000 to CalPERS. So that was, you know, we paid that back in July. So the fact that we're at 51% is, we're really on track right now. Any questions about that? Okay, so moving into operating expenses. See where are we at? Line 24. So we did see an increase in both liability insurance as well as in earthquake insurance. We originally budgeted $98,500. As you can see to date, and these are one-time payments in the fiscal year. We spent $127,771, which is a difference of the $29,300 that we put in. We anticipate that being the same or more next year as well. In terms of utilities, line 25, we did have to increase that line by $20,000. I think all I have to say is natural gas, and you guys will understand why that number has increased.
I'm surprised it's not more.
Right. I mean, our bill jumped by 5,000 last month, wasn't it? Yvonne said, Christy, it went from like 5,000
to over 5,000.
Yeah, it was crazy. So we do feel comfortable with this 20,000 number because the furnace is only going to be in continued use for probably another month or two. So again, we'll keep an eye on it, but we're confident that the 88,000 we've put for utilities should be good, because we were underspent a little bit in some of the other utilities. Line 27, other operating, there's an increase for copier lease payments anticipated for the entire fiscal year due to supply chain delays with purchased copiers. Boone, you weren't around for this, but we did an RFP for copier services almost a year ago, where we're purchasing our copy machines, and then we're like, part of the purchase is service that they'll be providing to us. Currently, or before that, I should say, we were leasing the copiers and service to the tune of, I think, like $2,400 a month. By purchasing the copiers, that's taking the price down substantially, but we are still waiting on getting those copiers because of supply chain issues. So until we have those in place, we need to continue paying that lease fee, unfortunately. So that's where
Which line is that under? Is that 30?
It's other operating, line 27.
27. Okay.
Yeah, so we had to raise that line by 24,300 because we really don't have a choice. We have to have functioning copiers for both staff and patrons. Okay, line 30, vehicles and equipment maintenance. There's just a decrease here to reflect actual expenditures. We do anticipate spending. We did just get the news last week that our second vehicle is finally on its way. So that's why we didn't take this line down to less than it was, but we think 10,000 should be a good number to get us through this year. Line 32, advertising and marketing. As was mentioned at the board retreat on Friday, our marketing specialist, Bryn, and I are looking into doing some direct mailing. And based on the numbers that she was able to collect, we feel confident that adding the 7,100 to this line will allow for us to do 2 direct mailings this year. And it will be good to see how that goes so that we can build in, at least 1 quarterly in next fiscal year. So we'll have better numbers at that point to see what it costs. Line 33, website development. After talking to Christy, we decided that it didn't make sense for this to be a separate line for $100. So we're going to be removing that line from future budgeting, and we moved that $100 into advertising and marketing. Line 35, it's the good and the bad. I think we talked about this at the board retreat as well, that we had 3 open seats and only 2 candidates file. Therefore, we didn't have to spend this estimated $75,000 to be put on the LA County ballot because there was not a competitive race. So that's $75,000 of savings. And it ended up working out great because we were able to appoint Trustee Lim. Long story short. So overall, in terms of operating expenses, as you can see, there were some increases. And then with the big decrease of the trustee election, it's an overall reduction to the budget of $4,400. Any questions about any of those?
Should we be concerned that we're at 65% of that and halfway through, even with the reduction?
That's an excellent question. We're okay because when you look at line 24, it's that one-time
the insurance was paid ahead.
Yeah, so that was paid out right at the beginning of the fiscal. And as you can see, the other ones kind of come in as time goes on. Also looking at county tax collection fees, that's another line that won't change moving forward. Okay. So I think we're good to go. But yeah, definitely a great question. Okay, professional services. As I mentioned with line 38, this was increased for the additional financial services due to the elimination of the office manager position. Next year, this will be a really solid, even number because we can anticipate pretty much how much we spend on the audit. And we're on a flat rate now with iBailey of $7,200 per month. Which to me is money very well spent with the way things are going with financial accounting and disclosures. So we did add the $40,000 to make that line where we think it's going to be towards the end of this fiscal. In terms of line 39, we did have to increase for employment related services. So that we added 7,500 to that. I think this year we budgeted 15,000, which is kind of low based on what it costs to work with our attorneys. So I think the 22.5 makes more sense anyway. There may be some minor adjustments to the actual expenditures because there were some expenses that were able to bill to the CFD or the bond proceeds. So that number might adjust a little bit anyway. That will be reimbursed from the bond proceeds. And in terms of line 40, consultants other, we did put an increase of 20,000 for the IT and facilities assessment that we're hoping to do by the end of this fiscal year, as well as technology consulting budget being absorbed in this line. And the technology consulting is line 46, so it's down here a little bit more. As you can see, we pulled the 1,800 out. We just feel that all consultants should be one line, and we're putting that into this consultants other line as well. So that's taking the amended budget up to 65,000 to cover all of our consultants other services that we're paying for. So that is an addition of $65,500 in professional services. Okay, moving on. So information technology, line 44, there is an increase for security cameras, computers, and 2 additional copiers originally budgeted for in fiscal year 2022. When we laid this budget out and took it to the board, we had anticipated buying all of those copiers last year. They were supposed to be delivered at some point in June 2022. Being that that didn't happen, that money wasn't spent out of last year's budget, but now we need to account for that additional expenditure this year. In addition to that, David's looking at getting, I think, 4 new computers for the Bob Lucas Library for their staff, as well as we are putting in security cameras at the main library in support of the upcoming Open Plus project that we're putting in place. So all of that together is an increase of $30,600, which takes this budget line to $50,600. Line 43, technology maintenance fees. There's an increase there for additional server warranties and unanticipated maintenance. Are there any questions about that?
Sorry, do we have our own servers, or is this just cloud you're talking about?
I believe we have our own servers here at the library that David maintains, but works with you know, some outside consultants to maintain them, but the servers are here. Okay, so as I mentioned, line 46, technology consulting is now being absorbed above and under consultants other. So that line will also go away by next budget year. Line 47, telecommunications. There's an increase for increased monthly service fees for telecommunications, and that includes like staff cell phones, internet. What else?
Hotspots. There were new purchases of hotspots to accommodate the buildings.
Yeah, the hotspots that we check out to the public
for internet. So
there is the proposed amendment of $38,800 for information technology. All right, moving on to library materials. There's really not too much to say about this. As you can see, overall, there's only a $2,000 reduction in the library materials budget. Basically, they wanted to move $5,000 from print books and distribute that into downloadables, as well as DVDs and video games. Let's see, and periodicals, they made that a decision of a reduction of $2,000. So overall, that budget was barely touched. Moving into programs, we did add $3,000 to line 60 under adult services for the Mount Low Chamber series that we're hosting this winter and spring. There's 3 concerts, and that hadn't been originally budgeted for when we did the budget last year. Besides that, we also increased the all ages budget by $3,900. Originally, and we're going to be going into this next in donations and grants, we originally had budgeted $6,000, I think it was, for all ages in donations and grants, but we had to shift some of that money to the Poets Laureate program. So we're just adding some of that revenue for all ages programming into the general fund budget. So it'd be an increase of $3,900 there. So overall, the total program budget is increased by $6,900. So overall, looking at total expenses line 68, we are adopted a budget or amended budget that we're recommending is $4,092,100, which is only a $1,400 change from what we originally budgeted, which is pretty amazing, I think. And as you can see, due to the increase of $152,000, we're anticipating being able to put all of that into reserves. So happy to answer any questions.
Nikki, can I just ask for on the like the 64 and 65?
Mhm.
What is that money covering? Because it seems like a really small amount, but like it's not covering.
Yeah, most of the money that covers literacy and volunteer services comes out of donations and grants. So you'll see those as higher line items when we move into donations and grants, because most of it is grant funded.
Okay.
Yeah, so from a bookkeeping perspective, is that just confusing to me? Where there's
Well, maybe what we should do is move into donations and grants so you can kind of see what we're talking about. And then if there's questions that things are still unclear, we could come back to general fund.
Well, so just philosophically, right? The donations and grants are book kept on that separate sheet. And the payments to those services are not double book kept in the main budget. Is that right?
So when we like write a check or use our credit card to pay for things, we code it according to where it should come out of the budget.
Right.
Can I make a statement here?
Yeah, please, Christy.
A little bit. So, and that is a good point, because when we're showing you the budget, there is a separate general fund and a donation grants budget. But when you start seeing the monthly financials, we compare both, and we provide a combined so that you can see total cost to the district and how much was funded through grants and how much was otherwise. But in terms of the accounting and the audit, they are kept in separate funds. So as Nikki said, when you make an expenditure, we want to know whose money you're using, general fund money or the grant money. So there's definitely a separate accounting, but we also have the ability to put it together. But there is no double counting in what you are seeing here.
Right. So currently, when we go to the donations and grants side, and it says that there's 3,200 in salaries that's covered by all of that, that has not been represented above,
No.
correct?
It's above and beyond.
Got it.
Yeah.
Perfect. Thank you.
Yeah, so for example, and I'll scroll down and this will be one way I can demonstrate what we mean.
Right.
So with hourly, as you can see in line 14, the proposed amendment of $12,000 here was because we were able to get an additional grant from the state library to help fund ESL staff time.
Right.
In the past, it could only be used for the literacy coordinator for like the literacy services. They expanded that for us to be able to apply for additional money for ESL specifically. So that money is now being applied towards our part-time library assistant that works at Bob Lucas, towards her salary or her hourly wages. So then we reduced in the general fund that hourly rate by number by 12,000 to account for that.
Right.
Does that make sense?
Yeah, and within that, that is also a very specific thing, right? So like line item 5, the library literacy services maps to exactly what you were talking about.
Correct. So like, trying to think, Christy. So this 35,000 here on line 5, that's going to make up some of the salaried wages, the hourly wages, as well as like some of the expenditures down here below for programs. And I think also collections, but all of that. Oh, sorry, go ahead.
No, I was just going to say on a monthly basis, when you see the grant report, you have a column for every funding source. So you can see who the Friends is paying for, what types of programs they're supporting, which ones, the foundation is supporting. It's just too difficult to show 10 lines at a budget, right. But you will see that, yes, you will absolutely see those funding sources relate directly to items that are below.
Perfect.
Yeah. Okay, so moving on, and Christy, you might have to jump in on this because I know this was a
Yeah,
little bit.
between the two of us, there's a lot going on here.
Yeah, so with line 9, total donations and grants, you can see there's an increase to reflect additional grant support from the Friends of the Library. Originally, we budgeted 22,000 as the estimate that they gave us, and then they ended up being able to give us $28,000. So you see that $6,000 difference reflected there. We also, as I mentioned, received additional funding from the California State Library, as well as Khalifa. Do you want to talk about Khalifa, Christy?
Yes, Khalifa is, and it's passed through. I'm not sure who the original grantor is, but Khalifa will be providing $5,000, and you'll see lines below. Some of it was to support that Open Plus door that was being done for the library, and then the other portion has to do, they're supporting the cameras. Right. So on the other, on general fund, where Nikki mentioned, there's going to be new cameras, a portion of that was funded from the grants.
Yeah, so Open Plus, we like, as Christy mentioned, which is being administered by Khalifa. So that's why you see them as a separate line. We're not receiving the revenue straight from the state library. So Khalifa gave us a certain amount towards upgrading the door as well as the security cameras, and the difference in that expenditure we accounted for above in the general fund. So, oh, sorry, go ahead.
For the Friends, for example, why is that 100% now? Like, do they also have the same fiscal year, or how does that work?
Yes, the Friends are on the same fiscal year as us. And the reason you see that $6,000 difference is because when we took this proposed budget to the board in May, they hadn't had their last book sale yet, so couldn't predict exactly how much they thought they would give us. They typically donate half of what's in their bank at the end of the fiscal year to the library. So that last book sale, as well as probably other sales in the library, were more successful than they anticipated. So they were able to give us that additional $6,000 that we weren't aware of ahead of getting this proposed budget back in fiscal year 22.
Yeah. No, it just looks like they're on calendar year, right? And it's one of those things where if they're part of that same system, why can't we all get along,
Well,
calendar year, fiscal year the same?
It's a really good point because our foundation is on a calendar year. And it makes things very complicated. I had a meeting with the foundation last week. And the reason it complicates things is because we create this budget in, like I said, April, May. We take it to the budget committee will see it first for next fiscal year when we meet with you in May. Take it to the full board in May. If there's any amendments that need to be made, we can get it like the final approval in June. But the foundation asks for our request for funding in September. Mm-hmm. So it's really hard to know what we're going to need for the following fiscal 9 months ahead of time. So we do the best that we can. They've made arguments that it's the better way to do it in terms of foundation. I will continue to explore that with them. But long story short, they made this pledge to us basically at the end of 2021, because that's when they established their budget, this $35,000. I can tell you that the approved amount they're going to give us for next fiscal year is $37,500. So we already know that number for next fiscal, whereas like the Friends won't know exactly probably when we do budget prep.
Right. And I mean, let's be honest, right? We're reviewing on a quarterly basis anyway, so it is what it is, and we'll just re-vector.
Yeah.
So I was just curious, like this whole CY, FY thing is just,
Yeah.
If it's all us,
yeah, and I do want to say we've come leaps and bounds since even 2 years ago when we didn't account for donations and grants separately at all. It literally used to be like a donations and grants line. This is the revenue number, and it was getting spent somewhere in the budget. So at least now we're really being able to show the support groups as well as the public how we're spending that donation and grant money. The only time it is complicated, and I hate to even bring it up, is when, like, so for example, with line 17, staff recognition, some of that money comes from Friends, some of it comes from foundation. And it can be a little bit hard even month to month to lay it out that way. So I'm working with Ashley to think of a better way for us to like say, okay, this whole line is going to come out of this, you know, this support group, whereas this other line is going to come from the other support group. Sometimes it's not that clean, but we're doing the best that we can to make sure that it's accounted that way, if that makes sense.
Right.
Yeah. So one other thing I will point out, in line 3, Altadena Library Foundation, as you can see, the adopted budget, they promise us $35,000 for this fiscal year. They have given us a check for $15,000 thus far, and they know they need to give me an additional 20. So hopefully that check will come in any day. But as you can see, we increased by $20,000, and that's because they applied for a grant with the Pasadena Community Foundation, which they got. This, of course, was ahead of, like, after we had approved the proposed budget. And that grant was specifically for Fab Lab equipment, which is, as you can see, we added line 22 to this budget, and it has been spent. And it had to be specific to that. Do we need to talk about it being in kind, Christy, or no?
You might see that when you see a combined financial statement, is that since it wasn't cash, they spent it out of their funds. We just code the revenue a little bit different. It will show up in the audit that way as well as a gift.
Yeah.
A gift of, instead of gift of cash, it was a gift of the actual equipment that they purchased separately.
Yeah.
But it will be maintained, and it is the property of the Altadena Library, so it does belong on your financials.
Right. So this one was kind of weird because a requirement of the grant was that they spend the money, not us. Typically, if they get a grant, we get the money, we spend it, and you can see it as revenue as well as expenditure. So this one's a little different, but it doesn't show up that way on here, but I did want to point that out. In future months, you might see that it's like, it doesn't come in as revenue, it's kind of like in kind. Okay, but congrats and thank you to the foundation for getting that additional 20,000 for us.
I'll jump through free money.
Yeah, we love it.
Are we a like tax-free organization? I don't even know. Like, do we pay tax on stuff or?
Christy?
Government entity, no, you do not.
Great.
Yeah.
Thank you.
Okay, so moving on, we'll go to, like I said, line 14, hourly. That increase, as you can see, the 12,000 was an additional grant that we were able to apply for and get from the state library, which is great. Line 18, staff development, training and travel. We did increase this line by 2,500 to support additional staff development and training. Line 19, equipment, furniture, and fixtures. This is an increase for the purchase of an additional mobile library unit, which was carried over from fiscal year 2022. We ordered the van a year ago, I think it was. Yeah, so we obviously thought we were going to be paying for it last fiscal. That was not the case. So we added this, and this is being funded out of the line 7, California Library Expanding Your Footprint. So again, it was like, it was already in the budget. We just thought it was going to come out of last year's, so I had to adjust. Line 20, structures and improvements. So this is what Christy was mentioning about the Open Plus project that we're working on. We were given $2,500 for a new door that will allow patrons to visit the library during non-operating hours. We had to make some adjustments to the door. And then line 22, we added that, as I mentioned, for Fab Lab technology upgrades and equipments funded by a gift in kind from the Altadena Library Foundation. So that was an increase in operating expenses of $75,000, but as you can see from the adjustments above, all of that's been accounted for. Let's see. So moving on to programs, line 30, literacy services. This is an increase for additional materials for the ESL program. So not only did we get the $12,000 for staffing, but we also have an additional $1,000 to spend on literacy services as it relates specifically to English as a second language materials. And that 5,500, the reason it's important that the money comes from grants, but it's also mainly buys collections or things for participants that they keep. Like, as you know, most of the things that we buy for the library, people don't take with them. They borrow it and bring it back. Almost everything that's purchased by literacy is kept by the participants and students. Line 32, as I mentioned, we made a decrease here by $3,900. We originally budgeted $6,000 for all ages programming. But as I mentioned, we did not have Poets Laureate as a separate line. That has been added, line 33. And we budgeted them $5,000 for this fiscal year. So that has been built into that. And it was kind of offset by the all ages category. In the past, the Poets Laureate, which the program has existed for almost 20 years, they were given about $1,500 a year, and that was coming out of the adult services line. But being that the program has expanded and we want to account for it separately, we needed to create this separate line item. Okay, moving on. Line 40, which is technology equipment. This was a decrease and a reallocation to technology maintenance fees for hotspot services. I think I need to turn this part over to you, Christy, because she spoke more thoroughly with David about it.
Yeah, David and I had a very long conversation. It's confusing because he does have several sources of grants here. And we do just want to make sure that we can account back to those granting agencies that we spent it. So again, on the hotspots, the service, the warranties, all those pieces, a portion is in general fund and a portion is here. So I believe it's called the Emergency Connectivity Fund. Is that what it's referred to above? I think so.
Yep.
Yeah, that's where they got a certain dollar amount, and it turns out it's going to be closer to 9,600. Well, that wasn't enough to cover everything. So we had to break out a portion of the hotspots that he purchased and a portion of the services. So that's what's below. And then website development, we had a special note on that, I believe, because they were going to be doing more on that this year, right?
A revamp, yeah.
Oh yeah, no, we didn't need to increase it. That's right. We moved it. We got rid of it in the general fund line because it was going to be supported here. It was going to be funded mainly here.
Mm-hmm. Yep. So overall, as you can see, we originally budgeted to $289,400. We did, with an increase in grant funds we've received, as well as reallocating money that was supposed to be spent in last fiscal year into this fiscal year. We see an increase or amended budget of $93,200, which puts us at a total of $382,600 being spent out of donations and grants.
And typically by this time, that revenue and expense line isn't as high. It's just if you take out the vending machine and the van, you're right on target with spending. But those two big ticket items, as soon as they're spent out, are going to bring you closer up to where you should be. On how much
and that's a good point for Boone. So under line 19, equipment, furniture, and fixtures, the reason this number was so high originally is because it's for the 2 vending machines that we're planning to purchase.
Right.
Right. So, and I don't know that that's going to happen this fiscal year either.
We keep pushing that one back too. You might be looking at that one a couple years in a row.
Yep, I think so. Yeah. Which is a whole nother.
Even once we approve it, it's going to take forever to actually get them delivered, Nikki?
No. We did interviews with the 2 vending machine proposers last week. Mm-hmm. One of which, the least expensive version, was $200,000. So that's well out of our budget. The other company, which is who we had planned to go with, their machine is not ADA compliant. So we feel like we're going to have to go back to the drawing board.
Why?
Mm-hmm.
Who's making a vending machine in 2023 that's not ADA compliant? That's unheard of.
It's basically like the machine is the perfect size. It's a great footprint. It has like shelves in it and it spins. But if you want something off the top row, you have to be able to reach up there.
Oh, it doesn't drop it down?
No. So yeah. Very unfortunate. And David and I we cannot reconcile doing renovations around accessibility and ADA compliance and universal access and then buying vending machines that aren't. So back to the drawing board, but I don't foresee us spending that money this year.
It's also crazy. It took us a year for the what is essentially a stripped down fleet vehicle to get delivered.
Yeah.
Come on.
Supply chain is a thing, right?
Crazy to me. Yeah. Like so hard to spend money right now. I'm just kidding. Okay. So did this clear up some of your questions, Boone, about donations and grants versus general fund? Does that help?
Oh yeah, I'm just again, if this is how it's book kept, this is how it's book kept. It's nice.
Yeah. Like I said, it's way, way better than we were a couple of years ago when people would be like, okay, well, you got this much money in grants. How was it spent? And you couldn't see because it was just all our expenditures in one long list. So this way we're really doing our best to make sure that not just our support groups, but these granting agencies, like we can share this with them and they can see how the money is being spent.
Yeah, if you want to stroke Boone, watch a board meeting from 3 years ago.
Yeah. Okay. So moving on, Christy, I think I'm going to turn this one over to you.
Sure. Yeah, capital is the same thing. There are delays. And so what we've tried to do here, and again, when you start to see them on a monthly basis, there's a lot more detail. But in terms of the budget, based on the schedule we were provided from the project manager, originally there was going to be it was going to go a little quicker, but there were things that they weren't aware of. So, and you can speak to that, Nikki, but they're only in the design and architect phases. So what we did was the only revenue coming in on a regular basis is interest. The unrealized gain line, well, you can see this again on the monthly basis. We have to mark investments to what they would be sold at today, even though the intent of the district is to hold them through maturity and there will be no losses there. We still have to show that. So the revenue is just the interest that's coming in off of those investments. And then when you get to the expenses, the only things they're currently spending on are administration, project management, and then, like I said, architect, a few design expenses yet. So what's expected to be spent throughout the end of the year is to use $660,000 of the bond proceeds. Now, when you get to the monthly meetings, you'll notice that we do a bond proceeds schedule. So you can see where they started out with their 22 million and how that is being used month to month and over what projects, which still isn't that interesting because they're at the beginning. But fast forward about a year when things are really flying and you're starting to see construction, you'll want to look at that even closer. It'll have a lot more activity. So the only proposal here is just to reduce the expenses to what's more reasonable. There's no reason to say you're going to spend, what was it, over 3, when likelihood of through now in June, it's only going to be closer to the $600,000, $700,000 mark.
So this thing will probably there's gonna be all kinds of crazy numbers a year from now, right?
Right.
Yeah. How does it actually break down into details? Is that more like you and Nikki are looking at that?
That's what we want to start taking to the committee. Because again, here, the only thing you're seeing on an annual basis is interest. But the truth is you have over 22 million that started somewhere. So the detailed one, I think the next meeting will be the first time maybe that we've presented. The February meeting might be the first meeting where we'll present it, showing you all of the proceeds. And yes, right now it's still broken out into the 2 libraries. But as we get additional assets within that, we'll break it out in that detail as well. So you can see things like, and again, we're going to be meeting with the project manager to identify what those are, but you'll have more than just 2 assets. It won't be just 2 libraries. It'll be larger components within there. You'll see how much is furniture and equipment, and if there's a special wing or a special, art. I mean, you'll see all the different components broken out.
Okay.
Yeah, Christy and I talked about it, that we needed to make this adjustment because it's not what we're going to spend. It's going to stay in the bank, or invested as we have designated with the trust bank and our municipal advisor. But this is closer to what we think we're actually going to spend. And, right. We've talked about it with the board, but, the conditional use permit process has really set us back in terms of getting the Bob Lucas project moving, which is, I think, we had anticipated that happening starting in this fiscal year, and now it's not. So we wanted the capital fund budget to reflect that. Any questions about the capital fund? Okay, so I think that's everything. I'll stop sharing. But I mean, like I said, overall, great news. We definitely, we always try to be as conservative as we can when we're doing budgeting, which is what you'll see sitting on the budget committee with us. But talk about being pretty right on track when you think about that. Almost everything that's coming in as additional revenue is going to be going into the reserve rather than having to be spent. That's our presentation. So we are looking, our recommendation is for you guys to move that you accept this proposed agenda and we'll present it to the full board at their February meeting for action on them to vote as well.
Do I can propose that.
Yay.
That we move to approve the budget as presented.
Okay, I will second. Roll call vote. Trustee Lim,
Aye.
and that's an I vote for me as well. Yeah, I mean, we're doing very well. I think the one thing to think about, Nikki, just thinking about our earlier meeting today is, and I think the collections issue is going to keep coming up. It'd be good just to kind of have like a set narrative that also includes, because I know like we've been talking about like their circulation numbers and that, but I think it'd also be good just to kind of have a set narrative that includes the budget and like, making adjustments based upon specific demands of the public. Especially because there's a whole separate line item on like purchase requests, right? Like that makes that whole process very real. I think would help kind of assuage any concerns as much as possible. So we have a review and approval of budget committee dates. Just the next item.
Yep. So I do believe we had last year's budget committee for the fiscal year approve a calendar.
Mm-hmm.
Being that we changed the committees at the beginning of the calendar year, I thought it made sense to have you vote on what works for you as the two committee members through the rest of this year. So we're proposing that you meet quarterly on the second, is it Thursday of the month at 1 o'clock, Catalina?
Yes, the second Thursday of the month at 1.
It was previously the first Thursday. We find in the course of the way things go, we think that it would probably be better on the second Thursday if that works for your schedules, because it gives us a little bit more time between the board meeting and bringing items forward to the budget meeting, doing it the second week of the month. And that also allows us to still have time to bring whatever you vote on and agree to the full board during their monthly meeting that month. So again, looking at the dates, we kept the February 2nd date, which was last week, because that was the standing meeting that had been set. But we're proposing that you vote to approve, and you guys can talk about this and we can amend it and then have you vote if you like a different day of the week or whatever better. We're proposing May 11th, August 10th, and November 9th. Again, those are the second Thursdays at 1 o'clock. But again, open to hearing your thoughts on that.
Yeah, that works for me, Jason. I don't know about for you.
Yeah, this far in advance we can keep that. I can just block it out. So
Okay.
Yeah.
And of course, like if we get closer to that time and there's not things to discuss, or we feel like we need to push the meeting, we can do what we did this time, which was cancel it and then schedule a special meeting of the budget committee. But I think overall this should be good. And we did make an adjustment. Boone is actually on the CFD committee that they meet the month before. So if there's recommendations to the budget committee from that standing committee, that can happen in that sequence.
Right.
So for example, what I would anticipate in April with the CFD committee is to review that special tax rate, because we're going to be using last year's numbers. So we would bring that to the CFD committee for review. then they could make a recommendation to the budget committee for that rate. And then we would take it to the full board ahead of the budget. So that's kind of the master plan behind all of this that I think will probably make the most sense.
Yep.
Okay.
So Jason, I move to approve the schedule, quarterly schedule.
I will second. Can I get a roll call vote? Trustee Lim,
Aye.
and that's an I vote from myself as well. I don't have any future agenda items. Do you, Boone?
Nope.
Okay.
I can't think of what else might come up. I think May is typically our busiest meeting. We'll look at last year's agenda and see if there's other things. Like you will also review the salary schedule based on the budget suggestions. You know, whether or not you're going to recommend a COLA, that would happen in May. There's a couple other things. And I also could see us bringing something forward about unfunded accrued liability, if we want to talk about trying to make some kind of payment or not, as well as maybe an update on the class fund. I'm not sure if that'll make sense by then too. So I think May will be our busiest meeting. That's typically been the case, but we'll keep you guys informed if anything comes up.
Okay. And then as far as the salary schedules, I don't know, Christy, if this is something that your firm helps with, but do you usually have like any kind of data on like, you know, CPI, you know, what average wage increases are in the market, like any of that kind of stuff for us to think about?
We do look at that, and I think that was part of what we did last year when the board approved, you know, a larger than normal COLA increase. So yes, I don't know the last time. I think your salaries have been set unless you're planning to do a different compensation study, but we certainly can provide data, and we'll lay out some scenarios on what CPI is in the LA area, as well as what we're hearing and seeing, you know, with other clients, and you'll have a chance to vet that before it even goes to the board.
Okay.
Mhm. Good question.
Mhm.
Any other comments or questions before I ask for a motion to adjourn? Okay.
Motion to adjourn.
All right. Thank you, Boone. And so we are adjourned at 2:01 p.m.
Well done. Way to go, budget committee.
Yeah, that's great.
It helps
We
when it's
all went
well
that way.
organized.
Yeah, and thank you to Christy.